And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome back to the market forecast for Monday, September the 13th. I'm John Hoagland. Thanks for trusting me with your time. Welcome back to another week of futures trading, another chapter in this year's book. As always, we're going to be looking at accurate context, good risk management, and infinite patience. As far as economic numbers this morning, we're going to have to experience some infinite patience. There's no major economic releases due out today. As a matter of fact, it's a pretty thin week for that all around until we start getting later on in the week. Today, we really have nothing. A Treasury statement at 1 p.m. Central. Tomorrow, CPI number, 7:30 Central, of course, with the focus on inflation. That might be something we'll need to keep an eye on, of course. Wednesday, import-export prices, industrial production, maybe something we'll need to keep an eye on. And, of course, the EIA petroleum status report at 9:30. Thursday, as typical, jobless claims. We also have Philly Fed retail sales, business inventories, and nat gas. And then, of course, quadruple witching with the Michigan sentiment numbers due out at 9 a.m. Central. So a little bit thin this week as far as economic numbers are concerned. Still some things to be watching for. Markets are still going to be offering opportunities. Make no mistakes about that. As far as this morning, U.S. stocks are set to open higher, apparently on some encouraging falling COVID numbers. That would be a good thing. Details have been released about the Democrats' plans to raise taxes as they look for ways to pay for these huge spending bills that they keep trying to pass through. Crude prices have found a bid this morning on the absence of nearly 1 million barrels of crude coming from the Gulf after Ida coming through, and now another tropical storm coming through, looking like it's going to hit the Gulf Coast of Texas this time. Another storm on the way. As far as OPEC is concerned, they were to have an announcement this morning. I haven't had the opportunity to check it out, but they were expecting to lower expected global demand for crude oil this morning. So I have not yet had the opportunity to see it. Crude opening right at weekly kickoff high this morning, so it should be another interesting and challenging week in trading. The VIX down 8%, still a little higher than we opened it on Friday, 19.13%. Dollar index up slightly at 92.80, and the 10-year yield just about where it was on Friday at this time, 1.32%. And we've got to go say good morning to everybody. Brett, you are the early bird lately. You win the prize. Brian, good morning. Ricardo, Theo, good morning. George, Murph, good morning. George, good morning. Bill, Dr. VJ, Adrian, JB, Ryan Williams, Steve Lee, good morning. NM, Ange, Janus, James, Cameron, Greg, Trone, Keith, good morning. Angelina, good morning. Dead letter opener, what's up? Laura, good to see you this morning. Zorain, as always, good to see you. Chris, Ted, good morning, fellow traders. Vince, good morning. And Nelson Benitez, Federico as well, saying good morning this morning. Today, Futures 101, we are going to be discussing trading choices. What does that mean, trading choices? Well, as we come into futures trading and throughout our career, we're probably going to be reviewing the decisions that we've made as far as the products that we're trading, some of the tools, the time frames. This is a long career and things change along the way. So we're going to be looking today at some of those trading choices. Tomorrow, we're going to be looking at some personality traits that we all contain that might be actually beneficial for futures traders. Wednesday, the opposite. Some of the things that we probably all have as part of us that may be detrimental to being a successful futures trader, and then a touch of trading psychology on Thursday. So here is the link to join up. I think you can join on all of them if you want to, or you can just join today if you'd like and look at it again tomorrow. And just so you know, we do have group coaching on Wednesday, right after Futures 101. I haven't been able, or Futures 201, I guess it is this week. I've been able to figure out how to seamlessly change from one to another, so it'll be two different URLs. Here is the link for group coaching on Wednesday. And without further ado, why don't we go ahead and jump into the charts and see what we're looking at early this fine Monday morning. And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience. Sorry about that, folks. And now we'll be ready for the daily in crude. Let me bring it up here. Opening it at an important inflection level already this morning. So here we go with the charts. Okay. I got my notes mixed up here. Hang on. Get this straightened out. All right. So we are in rollover. Probably Thursday into Friday, we'll be switching from October or V into the November or X number, month, if you will. Right now, we are at the upper extreme of balance. Now, you typically, when I'm looking at balance, I'm looking at the tops of the candle bodies. Another level of a check of those would be the ends of the candle wicks, or shadows as they're called. 70.60 is weekly kickoff high this morning. We're getting a good look at it first thing this morning. In play is last week's high and weekly kickoff high already. We're going to need some pretty big energy or a pretty big reason to break this range, because, again, we are in rollover. Is this going to be is the information that that OPEC came out with today, or the fact that we're a little short on crude oil from the Gulf, going to be enough to break this? It is certainly teasing it right now. Looking forward to seeing if the opening range is the high or the low of the session here. Take a look at the 30-minute chart. All right. So just on the 30-minute chart, we know that we've got some overnight longs up against some pretty important inflection or possible resistance up here. This is the kind of energy we're talking about, needing last week's high and weekly kickoff level very close together. There's probably some fish here somewhere. But this is what we're talking about. We're talking about, we've got some longs in the market already. They've taken a look above our overnight high. They've taken a look above weekly kickoff high. It seems as though it's being rejected, which is sometimes typical when we have all of these overnight longs. We know that settlement is down here at 69.72. We'll be looking at the we'll be looking at the possibility that we may have some overnight longs here. That may just bring price cheap enough for us to get a long at a better level for the next breakout above 70.60. And this, of course, is pivotal here. I mean, it's almost a short below, long above type of level, with the last week's high and weekly kickoff high are right up there. Now, there's conflicting information. There's always information about COVID out there. People are talking about how stocks are higher because of good COVID information. Same people are probably talking about how crude oil is too expensive because the demand is not going to be good because of COVID. There's lots of conflicting information, so I think it's extremely important to, of course, stay patient and make sure that you are trading what you see, not what you think. We've got a gap here. We can't close the gap relatively early. That may give us the opportunity to look for longs and have this coming up there. Have price take a look down towards settlement. If it can't close settlement, could mean that the next move above this important inflection level up here where these fish might be, could be the next opportunity to catch the bigger move. Again, we're still in rollover, and I'm not looking for the market to expand tremendously because we know that our longer, stronger traders are focused on a cheap rollover. So I'm seeing that we're unable to hold above. I'm thinking that our overnight longs are a little bit in trouble, and sensing that now as price continues to move back towards settlement. E-mini S&Ps. All right. So if we remember, last Monday, a week ago today, we had an abbreviated trading session. It was Labor Day weekend. We gapped up to the Monday. We gapped away from the Monday very abbreviated session, leaving an island top. That can be a significant reversal pattern, which it proved to be for many reasons on the way down yesterday. Downside structure since that island top looks relatively strong. We were still in rollover, so it's very difficult for us to gauge volume and open interest, but we did add 6,400 in open interest in the S&Ps on Friday and a pretty decent down move. Then, of course, we all are aware that, I hope that we're aware that we had a late spike come into play at the end of the day on Friday. Now, these late spikes, I'm going to show you right now on the profile, if I can hit the right button here. So this was Friday's profile. We opened, we ranged, late in the day, we extended the range lower, and we closed in that extension to the downside. And what that means is Friday we were attempting to accept lower pricing, but we didn't have the time. So if we were to open below the late spike, that's probably the worst situation. That's the most favorable to the downside. Opening in the late spike is probably the second most favorable to the downside. And opening above the late spike indicates initial rejection of that range extension to the downside on Friday, and would possibly mean that this is a pretty tasty little low that we've got here, and we might start to look for opportunities to buy weakness at the base of the late spike would be ideal. So back to the 30-minute chart. All right. So here's Friday's action. We know that we had some excess at the high. We ranged. We put in the late spike to the downside. This red line here I'm putting as a line in the sand as the base of the late spike. 44.66 is approximately that level. It appears as though we're going to be opening inside of it. However, we do have some overnight longs with which to contend with, and we're opening in range and value very close to Friday's point of control. What does all this mean? Well, it means that if we have an overnight inventory that takes us back down into the late spike but rejects, that to me is going to be a signal. Okay, I'm going to be probably looking for opportunities to buy weakness, even if we get that opportunity. We've got some overnight longs here. They may give us a better opportunity for longs. Any rejection throughout the session of the late spike on Friday could be viewed as a positive for upside continuation, and we'll look for that. Any acceptance inside the late spike from Friday could mean rejection of higher pricing, acceptance of lower pricing, and a continuation to the downside. So this late spike here has many different connotations depending on how the market responds to it today. Just the fact that it looks like we're going to open above it looks like rejection of lower pricing. Look for opportunities to buy weakness as long as there's no acceptance of price in the late spike. Nasdaq did not, however, have the island top put in last Monday. It did not gap to and gap away from Monday. We got last week's low here in play in the Nasdaq. We've got our weekly kickoff high up here at 15,690, 15,419 should be our weekly kickoff here. So we are definitely playing with it. 419, right? Just below our weekly low last week. So this is the zone that we're looking for as shorter time frame at these levels or outside longer time frame participation more likely. Remember, the Nasdaq is also in rollover. We added 15,000 on Friday, but is that rollover contention, or is that directional indication? It's very difficult to tell in rollover. We had the same situation in the Nasdaq. We had the late spike also. Take a look at the 30-minute chart. So here is the base of the late spike in the Nasdaq. 15, let's call it 520. 15,520 is the late spike in the Nasdaq. It appears as though before the open, market is rejecting price below that base of that late spike. If it happens and we can't reaccept in the late spike as acceptance of lower pricing, we'll look for this market to move back to the upside. Nasdaq's lagging behind the S&P just a little bit. The S&P, higher probability of opening above the late spike and closer to the point of control. May mean that you're going to need a faster execution here for the Nasdaq. But again, stay patient, because any acceptance or percepted acceptance below the base of the late spike might mean acceptance of lower pricing and emboldened sellers. Chris, the late spike is always within the last hour of the session. Now, here's the profile. So here's the profile. We know that the market opened higher, opened up there. It ranged the better part of the day, but late in the day, sellers came in and pushed price lower and closed it near the low. This creates the late spike. Okay, so the base of the late spike really is when it starts to leave single TPOs here. So 15,520 approximately is where that base of that late spike is. So late spike is any range extension that does not return to value and closes outside of value on any given session. Great question. Let's take a look at gold now. All right, so gold has been bull flag, failure of the bull flag, back down to this longer time frame trend line, no closes below it, a check down to it this morning, and really the market falling into range-bound activity. It's the third day inside this Wednesday's range in extended trading hours, in large part. Friday we looked above it, not really all that concerned about that, but we're falling range-bound. We lost 500 in open interest on Friday. Volume and open interest is slowing. I think that this is telling us that the ability for this area or price area is pretty much using up its ability to facilitate trade. Price is going to have to move to another level to look to facilitate trade soon. We've been seeing volume falling off for several days now. Can't too early to tell on today's volume, but taking a look at the 30-minute chart, we've got what might be considered a bear flag now. We've had bull flags. The market has been pushing back to the downside. I lost all my profiles here. I'll fix those up later on. But we've been in an upside trend. Now we're in a short time frame downside trend, and we're putting together what would appear to be a bear flag. So, this morning we were looking at the opening range opening it was the high of the regular trading hour session, 1792.50. Looks like that's now been taken out. 92.50. Where's my box? 92.50. So it traded straight to the high of the opening range. Still, the opening range remains the high. Still dancing with this trend line. Still dancing with the longer time frame trend line. I'm going to stay patient, but I think that there's some pretty decent opportunity in gold, if not today, at some point this week. We're going to be keeping a close eye on it. It's on a neighborhood watch, if you will. Take a look here at the euro. All right. It's been volleying high to low, high to low, high, central location, short time frame control. We've kind of broken up below last week's low. That might be something that is impactful and more likely to push us down towards a possible test of the weekly kickoff low, which is 1705. Didn't change. We're really just kind of range bound and short time frame controlled, and again still in rollover. Let's look at the 30-minute and see if there's anything interesting going on here, and there is a little bit here. We've got some overnight shorts here. Looking like they're getting a little bit nervous. Settlement is, of course, all the way up here at 118.36. So we've got all of our overnight shorts looking to the downside. If they can't see new business coming into the downside, we'll get a pullback. We'll get a pushback towards the gap close. If we can't close the gap, of course, that keeps us on the side of looking to sell strength. Any acceptance inside range, and certainly inside of value from yesterday. All bets are off to the short side. And I've got Justin here. Got to talk to my partner Dan about changing this product out for nat gas. Hoping to have that conversation today, Chris. But I don't see any reason why that's not going to happen. This is like a ball rolling down, probably one of my golf balls rolling down the cart path, because I rarely hit the fairway. Here's the drive. Here it is coming down. Here's the cart path. It's going boing, 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 boing. But now it is starting to show evidence of coiling, and that's telling us that there's some energy that's going to be building in this market. And what I'd like to do is I'm just going to slap a couple of cheap, quick trend lines on here. These are not good, solid. Well, I mean, there's some 4 points of contact on that one. Let's make that array. Then we'll take this next one up here, and we'll go from up here and across there, and we'll make that array. So as we get closer to the apex, a breakout outside of this is more and more likely, which could, at least for a day or two, offer some bigger opportunities. All right. So, Fred, you can't mock the Bears, especially when the Packers played that way, huh? Boy, that was really a surprise. I wasn't watching that game, but I was getting text messages from family who live in Wisconsin, and they were telling me how much they hope the Bears did better than the Packers. Nelson, I will contact you. And NQ this week, the weekly kickoff levels, 15,690, 15,419, 15,690. They're not in the resource library. Juan, you can see those if you get the weekly kickoff email on Sundays. We always put the S&P chart up there, but there's 3 other charts. When you say view other charts, Nasdaq's going to be one of them, and you're going to have your weekly kickoff levels for the Nasdaq on there. You bet. You bet. James, is there a video on how to set up the charts like yours? On our YouTube channel, we have some basic information on setting up the platform, but come to the group coaching on Wednesday and ask, and I can show you piece by piece through the back end and everything how I set that up. Now, there's the link. I believe that's to the group coaching. If not, I'll be here tomorrow again and Wednesday again with the link for you handy. And Justin Copper's great shorting work this morning. All right. Let's get down to business here. We got about 4 minutes. Take your deep breath. Stay humble, grateful, and creative today in your trading. Looking forward to seeing Dan back this afternoon with the group with the market recap, and you'll see me today at 12:30 for futures 1 or futures 201, I guess we could call it, and I'm back here again tomorrow morning at 8 o'clock. So stay calm, stay cool, stay patient. Let the market come to you. Look for those asymmetric opportunities. Get out there, profit. Trade well today. I'll see you in the pit in about 3 minutes. Have a great day.